If you enjoy stories that blend greed, ambition, politics, and the collapse of entire fortunes, you're in the right place. This story has all of that and more. Make sure to subscribe now and share this video with someone who loves financial history, because what you're about to hear is one of the most jaw-dropping events in early economic history: the South Sea Bubble. Our story begins in the early 1700s in Britain. At the time, the British government was drowning in war debt, over $10 million, a massive amount back then. They needed a way to restructure this national debt without raising taxes and causing political turmoil. Enter the South Sea Company. Founded in 1711, the South Sea Company was essentially a trading company. It promised to take over the government East debt in exchange for exclusive trading rights in the South Seas, primarily the coast of Spanish South America. But here is the catch. Spain actually controlled most of that region and wasn't about to let a British company come in and take over its trade routes. So, from the very beginning, the company's main asset was more fantasy than reality. But the illusion was powerful. The idea of untapped wealth in exotic lands lit a fire in the imagination of the public. The government began exchanging debt for South Sea shares, and as the stock price rose, people took notice. Parliament, politicians, aristocrats, everyone started piling in. It became fashionable to own South Sea stock. Promises were made that investors would receive huge dividends. Share prices soared from $100 to over $1,000 in less than a year. But there was something else going on beneath the surface. The company aggressively promoted its own shares. It lent money to people to buy its stock. Newspapers were filled with wild speculation and optimism. Even Isaac Newton, one of the smartest minds in history, invested heavily. He made a profit at first, then reinvested, and lost everything. The bubble kept inflating. Other companies popped up promising incredible returns for equally vague or absurd ventures. One company even advertised itself as a company for carrying out an undertaking of great advantage, but nobody to know what it is. That company still got investments. This was a frenzy, a mania, a gold rush of paper promises. By mid-1720, it was clear the company's actual trade potential was nowhere near its valuation. The hype had outgrown the reality by miles. Investors began to worry. Some tried to cash out. As confidence started to wobble, panic set in. Share prices tumbled. The crash wasn't slow, it was catastrophic. In a matter of weeks, South Sea stock lost most of its value, wiping out life savings and bankrupting families, businesses, even members of parliament. The fallout was massive. People demanded answers. How could such a collapse happen? How had so many been deceived? An investigation was launched. Corruption was uncovered. Bribes, insider trading, false accounting. It was all there. Several top officials, including Chancellor of the Exchequer John Aislabie, were arrested. Public trust in the financial system was shattered. The Bank of England had to step in to stabilize the markets. The king himself, George I, was indirectly implicated due to his support of the company. Though he managed to escape the worst of the political fallout, Isaac Newton, when asked about the bubble, reportedly said, "I can calculate the motion of heavenly bodies, but not the madness of men." That single quote sums up the South Sea Bubble better than any economic analysis ever could. It was about emotion, greed, hope, fear. The mechanics of the market were overtaken by psychology. And here is what is fascinating. The South Sea Bubble wasn't just a historical accident. It became the blueprint for future financial frauds. The idea of selling the dream, inflating value through speculation, manipulating public perception, it all started here. The story of the South Sea Bubble isn't about stupidity. It's about how smart, rational people get swept up in irrational markets. It's about how the thirst for quick wealth can override logic. And it's about how entire systems, governments, banks, media, can become entangled in speculative illusions. You might be thinking this is just history, but in reality, it's a mirror. The patterns that defined the South Sea bubble are visible today. In dot-com startups with no revenue, in speculative cryptocurrencies, in meme stocks driven more by hype than fundamentals. The costumes change, the characters change, but the play is the same. And that's why these stories matter. They teach us more than just facts. They reveal patterns. They help us understand not just markets, but ourselves. So, what can we learn from the South Sea bubble? First, be skeptical of promises that seem too good to be true. They usually are. Second, never invest more than you're willing to lose, especially in assets that you don't fully understand. Third, remember that financial manias always end the same way, in regret for the last person who thought the price could only go up. If you've made it this far into the video, you're already ahead of 90% of people. You're seeking understanding, not hype, and that's powerful. So do me a favor, subscribe to this channel for more stories like this, real lessons from history that help you make smarter choices today. And if you found this story insightful, please share it with someone who needs to hear it. Let's stop the next bubble before it starts by remembering how the last one burst. Thanks for watching.